For more on this, let's speak to Milad Azar in Beirut. He's a market analyst at XTB MENA. Welcome back to the program, Milad. Now, Asian semiconductors took a sharp hit on Thursday after a brief rebound. Is this pullback simply routine profit-taking, or are investors growing increasingly concerned about tech earnings growth?
Good morning. Thanks for having me today. Yes, we saw at the first of the week that SpaceX and ABM took a hit, a little bit of it, because of the disappointing result. After that, we saw last night Sandix, the semiconductor sector, Sandix and Western Digital disappoint the market again. That's why we saw this downturn in the Asian market, and especially in the KOSPI market and the South Korea market. We saw SK Hynix, Samsung, and other companies going into the red because of those results. We can see that it's more than profit-taking, more than the deterioration of the basics of this sector.
Right, and South Korean chip makers in particular have been most vulnerable recently. What does that signal about investor confidence in the very stocks that have led the AI-driven market rally this year?
Yeah, it's normal. After every boom, there's a bust a little bit. We can see that since first of the year, KOSPI took a very long term of a bullish momentum. After that, it's very normal to get some retracement before continuing this bullish momentum. At the end, we can see that the inflation, in a way or another, is weighing on those stocks. But at the end, this sector is still in a good position to continue this bullish momentum at the long term.
And despite weakness in the Magnificent Seven and major tech names, Dow Jones hit another record high on Wednesday. Is the US market seeing a broader sectoral rotation away from technology into traditional industries?
Yeah, this is a very good question. In the last few weeks, we saw some revaluation of the AI company, the tech sector, and we saw that the data from the US, the real economy is still doing well, from the ISM non-manufacturing to another ISM manufacturing. All the data are saying that the US company is still strong. The US economy is still strong. So on the long term, we can see that the investors are rotating from the AI sector that needs some revaluation to the real world sector and the real manufacturers.
Right, and meanwhile, Iran and Oman have said they've reached an agreement to secure shipping through the Strait of Hormuz, but crude is still holding at around $80 a barrel. Does this suggest traders remain unconvinced that the lower geopolitical tensions will translate into lasting increase in global oil supplies?
Yes, we can see, even if we see a real some agreement, it's a short-term agreement at the end between Oman and Iran. We did not see the finish of the war between Iran and the US. There's a lot of misunderstanding about this agreement and this negotiation. So what we can say here, that the investors know they are not really convinced that the market will be like before the war. We can, even if the war stopped after 2 days, 1 week, we need more than 6 months to regain the production, to regain the export level before war.
Right, interesting insights there. Milad Azar, market analyst at XTB MENA. Thank you very much for speaking to us.